$350 million. That's what Bedrock Robotics raised in 2024 to commercialize autonomous vehicles by 2026. They're not alone. A massive wave of autonomous robotics is hitting commercial reality between 2026 and 2028, and the numbers are staggering. This isn't just about self-driving cars anymore. We're seeing convergence across industrial automation, delivery robots, assistive exoskeletons, and specialized applications. Boston Dynamics trades at 58.2 times revenue. That's Tesla-level valuation for robotics. Why now? 3 factors. ARN infrastructure from Nokia NVIDIA partnerships, regulatory frameworks hitting in 2027, and real-world testing finally validating physical AI systems. Let's break down the numbers. NVIDIA stock sits at $1.13 trillion market cap, down 3.65% this week, but up 188% year-over-year. That's the AI infrastructure play. Nokia's betting big with $20 billion in R&D commitments, targeting 20,000 5G deployments for robotics by 2026. But here's where it gets interesting. Serve Robotics is already deploying delivery bots commercially. Neuro, led by former Google exec Boris Softman, is scaling autonomous delivery beyond pilot programs. Translation, we're past the prototype phase. LifeWord's Raywalk exoskeletons, technology dating back to 2001, are finally hitting mass market adoption. That's a 23-year development cycle reaching commercial viability. Industrial applications are moving faster. ABB is pushing fully autonomous manufacturing, while R3 Robotics specializes in EV battery disassembly. Think recycling automation as EVs hit end-of-life cycles. Underwater robotics from Aperon Labs targets offshore energy markets worth $400 billion globally. Now watch this number carefully. Department of Defense sourcing rules kick in 2027. That's a $50 billion annual procurement market, suddenly favoring domestic robotics. Vehicle homologation targets, regulatory approval for mass production, are set for 2026-2028. This creates a narrow commercialization window. Winners. Infrastructure players like Nokia, up 5.26% on ARN announcements. NVIDIA, despite recent volatility, specialized robotics firms with regulatory head starts. Losers. Traditional automation companies without AI integration. Manual labor-intensive industries facing displacement. The risk. Academic voices like Zhangyi Cheng warn about foundational reasoning gaps in AI-enabled robotics. Human judgment remains critical for edge cases. This is the part most people miss. Boston Dynamics is pushing their Atlas research platform to its limits before enterprise deployment. That suggests commercial readiness within 18 months. For institutional investors, exposure through NVIDIA for infrastructure, Nokia for connectivity, and direct robotics plays like Boston Dynamics or Serve Robotics. Key metrics to watch: deployment numbers, not just funding rounds; revenue per robot unit; regulatory approval timelines. The alpha opportunity, companies bridging the gap between AI capability and physical world applications. Beta risk, regulatory delays could push timelines to 2030, killing first-mover advantages. And here's the kicker. What if this wave crashes? Autonomous vehicles have promised commercialization for a decade. Regulatory approval could stall. Public acceptance remains questionable after high-profile accidents. Labor unions will fight displacement. Technical limitations in uncontrolled environments could force another development cycle. The bottom line, $350 million in funding signals serious commercial intent. But 2026-2028 is make or break for autonomous robotics. Early positioning in infrastructure and specialized applications offers the best risk-adjusted returns. This isn't hype, it's commercial reality hitting at scale.